Your Excellency, thank you so much for joining CNBC. I want to kick off by asking you about what's happening today, actually, in the oil market. Now, I know that this isn't necessarily your bag anymore, because obviously what's been happening with OPEC and OPEC Plus, and you're no longer a member of OPEC, but they've just extended these cuts. And a month ago, you seemed very concerned about what was happening in oil markets. And in terms of bringing the market back to the previous levels that we've seen earlier this year. How do you see things playing out today?
This all started out with the lack of agreement between OPEC and non-OPEC countries, or the OPEC Plus as it's called. And that lack of agreement really took the price down, and there was a flooding of the market, and it wasn't good timing, because then the pandemic unfortunately came and hit the entire world. So it was sort of a double whammy where the oil market got hit in a very big way. So demand is the biggest issue now because of the quarantines and everybody stopping movement.
Was it a mistake to flood the market, do you think?
It was a very big mistake, I think, to flood the market. Flooding the market is what caused us to go to a very low level. And then the pandemic basically took it the other, almost to a very dangerous area where people could not afford to produce anymore, and we saw negative pricing in the WTI. Now I think the actions that have been taken by the same group really is to agree what was agreed in the past, and keep more sensible I think approach to the market to cater for the supply and demand that we're seeing. So there is a shortage of that coordination in the beginning of the year. Now I think it's much better, and hopefully that the demand should pick up slowly with people coming out of quarantines all over the world, or the lockdowns, and especially the movement of transportation in general, mass transportation, and jet airlines taking off again, and so on. But it will be slow.
When you think about what's happening in the LNG market, there is a sense that, for example, U.S. players are feeling the heat in a way that U.S. shale producers have been feeling the heat over the last several months. Do you see a similarity between what's happening to U.S. LNG producers versus the shale producers, who are in a heck of a lot of pain?
Yeah, I think the entire oil and gas industry is in a lot of pain these days because of the lack of demand and the prices going down so much. The higher cost producers, whether it's oil or gas, are the ones that hurt first, if you will. So definitely it did have an effect on LNG, and LNG is part of the entire energy system, if you will. So if mass transportation stops and it hurts the crude side, the gas side is when factories stop, people are not working, electricity is less in industry, and a lot of the mass users of gas, that also gets hit. So both got hit, but in different areas, I would say. So hopefully, now that people are coming out of lockdowns around the world, and hopefully getting healthier and able to move around more freely, things should pick up from a demand side, and then price would follow.
There is a feeling, though, that those who can produce LNG very cheaply, like Qatar, are putting the squeeze on U.S. producers. How would you respond to that?
We have always maintained trying to develop our reserves in the most efficient way possible, keeping in mind safety, reliability, and efficiency. We are a very efficient operator. We are, talked about as the cheapest cost producer. It's because of our efficiency and the way we run our business and our resource base. Whether that, harms others in how they can do business, there are more expensive producers in different areas around the world when you talk about LNG. I think the people that get hurt most are the independent producers that are not actually full chain producers, the people that own just terminals and are in just a certain business. But the integrated producers that produce their own reserves and have an integrated business, they can survive these kind of hits. But it's a hit that everybody is feeling the pain from.
Now, in terms of what happens next with regard to the LNG market and the price, you've said that there's absolutely no way that Qatar would consider cutting LNG production. Are you still of the same mind?
Yes, I mean, Qatar would never stop production to control the market or to see, to cater for the price decline. I think others would have to cut before us if that.
But you have
reaches.
cut back on spending.
No, we haven't really. All the development, what we have done in Qatar is we have looked at being more efficient because of the circumstances that we're in with lower prices. We had to look at more efficiencies in different areas. So we have cut costs around the entire oil and gas industry in Qatar, and we have come down by about 30%, but we haven't touched anything regarding future developments and production. So we are planning to develop the expansion of the North Field, and we have mentioned that. And maybe we can take that in another segment, just talking about the expansion of the North Field. But as far as Qatar is concerned, we have no plans at all of reducing our production.
And Excellency, when you think about what happens next with regards to price, obviously a lot of things impacting how energy is used at the moment. How quickly do you think that we'll see LNG prices come back to levels pre-COVID-19?
I think COVID-19 effect on pricing is difficult to really. It's difficult to predict how it's going to look a year from now before we actually see if there is a next wave or not. I mean, most of the scientists and medical professionals are telling us there could be a strong possibility of a second wave. If that comes, then that will also slow down how people could move, and I'm not sure how we may be more prepared for it and have less lockdowns around the world. If that's the case, then we'll see a much quicker recovery, maybe in 6 months to a year. If there is a second wave, then it could take a little bit longer. But I'm not worried about the long term. We are long-term players, and these are short-term events that have affected us. But there are some long-lasting effects of the COVID issue regarding travel and different things like doing business as professionals. I think you'll see less people doing business by traveling and more using video conferencing and other means that we got used to now, and working from home and so on. So I think there will be some change in our attitude about whether it's business traveling or working from home, and things could change a little bit because of COVID-19.
So for Qatar, no major tightening of the belt needed off the back of what we've seen from COVID-19, at least not yet.
No, we have really done the cost cutting. We've cut our total spending by about 30% in all our oil and gas industry. So that has been sufficient for us. We have cut some manpower, we have cut some operating costs and some capital costs. But as I mentioned, regarding the North Field, we are full steam ahead. We are, as we have mentioned in the past, we're going to be awarding all our contracts for North Field expansion project. We have two phases, the east and the south expansion. We're going to go from 77 million tons per annum to 110 million tons per annum by 2025, and then up from 110 to 126 by the year 2027. And we've ordered all the shipping requirements, and we've booked slots for about $20 billion we've announced just a couple of weeks ago, and that's at a cost of around $20 billion US, and we've booked up 60% of the entire world's capacity of building LNG ships. So these, we call them our moving pipelines, if you will, but that's to have our full supply chain up and ready by the time we have all the developments in place.
Your Excellency, I'm afraid we're going to have to leave it there. Thank you so much for joining CNBC.
Thank you. Thank you.